Hello guys, in this video I'll be sharing with you how to buy boom and sell crash. What that implies is that you will only not just structural way of buying, but how to catch spike. Meaning you are going only for the catching of spike. So I'll be sharing with you how you can catch a spike and how you can catch a drop. So what that means, you will identify the zone, and once price get to that zone, you will place your buy trade for a boom, and when price get to the zone, you will place your sell trade for a crash. So let's go into the details. You will come to your chart and you will mark your point of failure and point of reaction. You might be wondering, now this is crash. We'll be looking for only to sell crash, right? This is 4-hour time frame. So the question is, first of all, let me explain to you what is point of failure. Point of failure are the zone of your wick. Like here now, this candle, you will realize that we have a wick. So wick is point of failure. In this scenario, this wick shows the failure of the buyer to take price up because seller bring price down. And then the point of reaction is the body of the candle. So you'll be trading these places as a zone. So for instance, we want to sell crash. I will mark the whole of this zone together, which comprises of my point of failure and point of reaction. So I will mark this zone like this. That is a major zone. And here too now, we are having another zone. Remember, this is 4-hour time frame. So this zone are strong and valid zone. So I will mark these particular zones. So the way they are now, this is how I will mark them. And I will now go to my 15-minute time frame. Let me trace. Okay, now you can see this zone here. So this zone you are seeing, you can see that this zone is closer to our upper Bollinger band. So later in the future, when price pull to those zones, you will now have your beautiful entry. You can see those zones that I marked. So price will pull from here into this zone. So what you will be doing by the time price is getting here, price has already pierced the upper Bollinger band. And you realize that your CCI is at the level of 90. So in this scenario, remember what you want to do is just for you to get a drop and go out. It's not that you want to hold the trade. So once price get into this zone, this particular zone, for instance, if you want to use 0.2 lot size, you first of all place a trade of 0.1, which means you will open a 0.3 and close 0.2. Then you keep waiting. If it did not drop, you don't need to be afraid. Your stop loss is above that zone that you mark. If price push up a little, again, maybe if you are in a drawdown like up to 2 USD, you add the other 0.1, which means now you have put your full trade. It will eventually drop because those zones are point of reaction that you have made. even if the trend, even if it's going to continue to the upside, it will definitely respect that zone. There will and definitely be a reaction in those zones. This strategy is strictly for cashing drop. Like I said, it's not the regular way of trading. Let me use this particular one as an illustration for you to see. This is 4 hour. If you had marked here, I'm using this move to the upside. If you had marked here, I remember when price came into half of this zone, which is this particular one, and you sell now, you see that price still take you up a little. This is the zone. If you had marked it earlier, price come inside of it. If you have entered your sell here, it drag you a bit. You enter the second one, your number 2 lot. You will see that it drop, though it still continue to the upside. But this drop from here to here, you take your profit, you are out. Because what you were doing is not the regular way of trading. You were only there to cash your little profit that you can take per time and then go out. That is just what took you there. Here is another one. This one has no drawdown at all. If you had marked this point, look at when this price came into this zone and you place your trade here, you would have taken your profit. So this is for a crash. If you go to your lower time frame, this zone will coincide with your RSI at the level of 90 and then the upper Bollinger Band. Remember, you are marking the zone. You are not just trading in isolation. So let's look at boom. And let's take boom 500 as our case study. Now boom 500 is bearish. Boom 500 is bearish. But let's say, look at this. If we had marked here, this particular zone, because of this movement from here to here, if you had marked it, let's go to a time frame and see what happened when price pulled to that zone. So let's go to our 50 minutes and see what was the reaction of price when it gets to that zone. This is the zone that we mark, right? So let's move a bit and see when price came into that zone. So look at it. In all of this, you can see that we have spikes. So if you go to 50 minutes, each of these spikes happen around the lower Bollinger Band on 15 minutes. So you would have still buy, and then a reaction must happen that will put you in profit before closing the trade. Regardless of the trend, that is what I'm trying to tell you. That regardless of the trend, there will be a reaction in those zones. Regardless. But you are not holding it, because since it is against the trend, if you hold it, it will take you back into loss. That's just the disadvantage about it. You are not going to hold it. If you hold it, it will take you back into loss because it's against the trend. You are only picking out and go out. You just pick, you go. You just pick, you go. You just pick, you go. So this is exactly how you can trade the boom. To catch the spike, you first of all go to your H4 and mark your zone. I just mark it for an illustration now. And this is exactly how it works. Like in this scenario now, what do? I will mark this zone. And then I'll go to my 50 minutes and wait for price to pull into this zone. Once price come back from here into this zone and it's around here, I will buy. It will definitely react. It will react. backtest it on your demo and see. It will definitely react, and that reaction will put you in a profit that you will close. Because it's not in the direction of the trend, it will continue, so you can easily take your profit and stay out. This works, and I encourage you to go back test it, and you'll be amazed at the result that you will get. I believe you have learned something new. I am working on more precise and accurate one with a little alteration of the relative strength index, and I will share that in the subsequent video to come. But I want you to backtest this on your demo account, and let me hear from you. Let me see your feedback either in the Telegram group or in the comment section. Thank you, and see you in the subsequent video. Please, and if you have not given this video, please do well to give it a like, subscribe to the channel, turn on your notification bells so you'll be the first to get notified when we upload our next video.